Welcome back. Well, it is a good set of earnings for Mass Financial Services. The company's NII and net profit recorded what was a growth, while assets under management also saw a rise this quarter. The company's asset quality has also remained stable for the quarter. In fact, the stock is at a fresh 52-week high. Off the day's high, it was trading at over 900 odd rupees, come off from those levels. But to talk more about the Q2 performance, as you can see, the stock is up 12 odd percent. Kamlesh Gandhi, the chairman and MD at MAS Financial Services, joins in now. Mr. Gandhi, hi, welcome to the show. Well, overall, it was a very stable quarter. Your gross NPA was maintained at around 2.26%. But I just want to start by talking about your disbursements, which are up over 50% on a year-on-year basis. There's been a strong amount of disbursements, as I can see, probably taking place to the within the two-wheeler segment, as well as maybe the salaried segment, if you can give us more perspective, considering it's a new segment that you all have launched. Take us through the disbursement growth this time.
Hi, good afternoon. So as evident from the numbers, we had a very strong quarter this year in terms of disbursement this quarter, and translating into a very strong AUM of 30% growth on YOY basis. And on the disbursement, I think each and every category of our products contributed very positively, be it our micro enterprise loan segment or small and medium enterprise segment, and obviously the wheels, that is two-wheelers, and the commercial vehicle, accompanied by the newly introduced product, that is the salaried personal loan. So all these products contributed to a good disbursement this quarter, resulting into a strong YOY growth of 30% in AUM.
Okay, so you are speaking about 30% growth in AUM. Earlier, you were targeting a 25% compounded annual growth rate in AUM. Would you actually exceed this target and that 10,000 crore guidance as well on the AUM? Will you be able to achieve it, say, next year itself?
See, historically, if you plot our performance over all this last 25 years in terms of CAGR, we have registered a very steady growth of 25% plus. And I would like to still hold on to that trajectory between 20 to 25%. Having said that, whenever we get a good opportunity to grow a little higher, we'll definitely go for it. And this time we are recovering from that COVID situation, where the disbursements were quite low the last year. But we are trying to recoup those lost ground of 2 years, which we lost because of COVID. So once again, on the guidance of growth, I would like to stick to that 20-25% growth. And that 10,000 crore AUM is well on cards. Maybe next year we should be there almost by Q3 or Q4.
All right, 10,000 crore AUM by Q3, Q4 next year, and 25% CAGR. I just wanted to understand a couple of things on sector specifics for you. Wheels portfolio was close to around what? 10-11%. That is expected to be anywhere between 20 to 25%. By when does that happen? And housing as well. You've been pretty confident on the way you want to grow your housing portfolio. I mean, you are targeting about 1,000 crores in terms of AUM in that. How do you plan to grow there, and what proportion will that be of your overall book going forward?
Starting from the housing piece, I think this quarter we have registered a 27% growth in our disbursement in housing also. And as shared with all of you earlier, we are very confident of growing this book steadily at a growth rate of anywhere between 25 to 30%. Having said that, this can bring about 1,000 crore of AUM within next year or two. And in the medium term, which at mass a decade is a medium term view for us, we say housing contributing around 20%. And wheels also contributing around 15 to 20% in our overall AUM mix.
Okay. Sir, can you just take us through what your net interest margins were this quarter? What are you guiding for? As well as your estimated cost of funds, which moved up Q on Q.
See, we were in a position to maintain our net interest margin in the range of around 7%. And the marginal cost of funds definitely increased. But because of the efficient liability management and our capabilities to pass on certain of the rate hike to our borrowers also, we could maintain a healthy NIMs of around 7% this quarter. And in the overall impact on the increase in cost was close to 0.3% because of the various liability and the diversified liability resources we have. But if the cost goes on increasing, our cost of borrowing will also increase. But having said that, we are confident to maintain our NIMs in the range of around 7%.
Okay, all right, 7% NIMS and 20 to 25% AUM growth. That's the word coming in from Mass Financials. Thanks a lot for joining us, Mr. Gandhi, and taking us through all those details. That's the word coming in from the company. The stock higher by 12%. With that, we'll slip into a short break now. Up next, we'll be joined by Mr. Srinivas Reddy, who's the Managing Director at MTAR Technologies, to discuss the Q2 earnings. Stay tuned.